So hello everyone. I haven't really been active on my YouTube channel because I had some psychology effect from the market to actually deal with. Okay, I'm so sorry. I would like to change this whole let me use AUD USD. My GBP USD is my very best pair, or let me use this one. So today we're going to be talking about structure and how to analyze the market, which I just recently learned very well. I'm not perfect. I'm still trying to grow myself in the trading industry, and I would like to show you guys the whole structural thing and what I have learned actually from the market and what I keep learning. Okay, I like AUD USD. I'm a fan of AUD USD and GP USD. I'm trying to learn how to trade EUR USD. I'm not a fan of the pair though. So normally before, I know many of us are making that mistake. I made that same mistake also. So many of like previously I would just go straight to my 15 minutes and I'll be looking for, oh, it did a change of character here and it came here and it broke structure, it didn't break structure here, it broke structure here, and I was kind of very excited about the whole thing. But recently I got to learn that your higher time frame is the key to your trading, and that's where the word top-down analysis come from. I'm sure many of you used to see this word. Okay, let me use capital letter. Top-down analysis used to, that's where top-down analysis come in. Now top-down analysis is showing us the history of the market. I got to learn that the market is a story. Without you knowing the story about the market, you cannot trade the market. So I want to give an example of how we're going to analyze AUD USD. No strategy, just an analysis. So if you can see very well from here, there's a break of structure here, meaning we know the market moves in this format. It moves higher high, higher low, like this. This how retail trader say the higher high, higher low. And for we SMC and slash ICT traders, we call it the demand and supply, supply demand, supply demand, supply demand. That's how we SMC and ICT traders actually call this scenario of the market. So we can see that from 1 month the market is already a bearish momentum. If you can see it here, it means it's already on a downtrend. Now if you draw your Fibonacci again from here, well, this is another different method, a different concept on its own. Fibonacci, if you draw it from here to here, we know that the upside is the premium, here is discount. So that is, here is more of the sales and here is more of the buy. The premium and the discord section depend on the trend of the market. Now we come down to 1 week. 1 week is also showing us, what are we seeing here? We're seeing here a break of structure, a break of structure. We're seeing here again a break of structure on 1 week. We're seeing here a break of structure. When market breaks with a week, it is not usually counted as a structural break, so we look for a body. The market must come out with a body. Then we have here a break of structure. We have here a break of structure, and no structure has been broken here yet. So we're still in the phase of structural movement in this whole section. So you can see it here. This is just for structure. No strategy is being taught here. No strategy, just structure. Now you can see it's break of structure, break of structure. No structure has been broken here. But don't forget, if you use our Fibonacci from up here, that's the premium and the discord. The sell section, the buy section, more of sales happen here. Anything above 50% is more of the selling aspect because it's a selling zone. But if you're using the Fibonacci from here to going down from up, that's for the buy section. The downside more of the buy, and up here more of the sell section. That way you're taking your order. You're taking your order from the buy here and order from the sell here. Okay, let me delete this. So we know that on 1 week, actually, structural break is also a downtrend. Then I come down to my 1 day. I'm very weird with my analysis. Bear with me. I'm not perfect either. So we have here, we just follow the momentum of the market, break of structure, which I just learned. I'm not perfect. I keep learning every day. We see here a break of structure. Also, I learned that from my coach recently. from a new coach I got. I've really been learning a lot from a lot of people. So some people usually say when there is a retracement, ICT people will say when there's a retracement of more than 3 candles, you take that as a retracement. But if you can see here, there were only 2 candles, so this won't have been taken as a retracement. So this is the retracement. Then here is the next retracement. I don't know if I'll take it as a retracement, but I'll take it as a retracement because 1, 2, 3. I would take it as a retracement, but normally the rule is 3 candles and above. Then there would have been a change of character here. There would have been this was actually, let me see if the body came out here. The body did not come out here, but actually I learned something recently which I was very amazed by what I learned. I learned mitigation block, I learned breaker block, I learned mitigation breaker, and I learned a lot of different kinds. I learned also rejection block. I know I learned 3 kinds of block recently, and that way it helped me know what the market is actually doing. So here there's a change of character. If you can see it in this extreme end here, there's a change of character here. The change of character here, but like I said, no strategy. Change, break of structure here, break of structure. Let's count the candles. 1, 2, 3. Break of structure here. But I call that a break of structure because the momentum of that candle was not much. So I'll categorize it as here. This is not a break of structure because the momentum, the candle is baby candle. Yeah, my words. They call this a break of structure. Break of structure. So we know that the market is actually going on a full downtrend. Break of structure. Break of structure. These are 1 day break of structure. We can see that here, and the market retraced back 2 candles. So I'll say this whole thing is a retracement. Now this whole thing, this is another retracement that has not fully come out because you can see it came out with a wick. You can see that, right? So I'll categorize this whole zone from here, break of structure, from here to here, from here to here. So my sells can happen here, the buys can happen here, but I will not leave the Fibonacci actually, so my chart doesn't look so weird. I might put a line there and color it to just a reminder. What color should I use now? Red. This is just a structural demonstration. So we've done the top down analysis from 1 month to 1 day, and we know that the whole market is already a bearish momentum. So we come down to 4 hours to know what the market is doing in 4 hours. Now from 4 hours, you can see the market did a break of structure here. We'll start with, I actually like starting with the beginning part to make it easy for me. So I used the break of structure. Then it came back, we chased back, but it did not break this structural down here. This is an order block. Like I said, I'm not teaching any strategy. This is an order block which market did a mitigation on top. Order block here. There was no break of structural here, but it was ranging. But if you can see inside the order block here, there was a minor structural here. I think they call it MSS. Some do call MSS a move of, is this shift of structure or something like that. Like I said, I'm not perfect yet. I'm still just showing what I learned recently. Then this whole baby things happening at the internal structure we'll see on a lower time frame, but on a higher time frame we're still on the range. This is a change of character. If you notice that here, change of character here, or shift in structure. It mitigated here and came down here, break of structure, came up here, a break of structure. You see that is an order block here, but also this is an order block here. This is a structural order block here, but also I'll put my line here because there's an inefficiency here. I like inefficiency. Inefficiency has been sweet. I learned that, oh, I should have turned this 1 day zone to red. Okay, I should have turned this one to blue. It's just a reminder of my trades on 4 hours. I use the colors to help myself with where I should know and I'll be alert for. Then break of structure happened here. You can see that, right? Break of structure happened here. There's also an inefficiency inside. Do not forget this is also a 1 day. Don't forget this red is also from 1 day. So that's why the sell have been stronger. There's an inefficiency here, which market came to test the inefficiency, and you see the massive moving down. But to find entries, you can come down to 1 hour, you can come down to 15 minutes, and you can find where to enter the markets. I'm not going into more details about structure, but you can see here, these are the baby structures. So the upper structure, the upper analysis helps you to know when to enter and when to know when your movement for either buyers, either a buy or a sell, is about to end. Well, I'm not going to say so much in this video, but I pray it has an effect on some people that are trying to learn. Please try and watch structure again, and I hope this is effective. Your higher time frame has a stronger bias in your analysis than the lower time frame. You can follow the lower time frame, learn about different kind of blocks, but firstly this video is only for structure. I hope I will do more video based on structure. Do not want to use so much of your time. Thank you.